Hey guys, Charles Watson here. Welcome to the Expert Influencer Academy and welcome to the second video in our Stocks for Beginners series. Today I want to talk to you about investing in dividends, and as a reminder, I just want to remind you guys that all the information in this video is coming from the book A Beginner's Guide to the Stock Market by Matthew R. Kratter. You could pick up your copy in the description below. Also, if you're looking to open a stock account, a brokerage account, you can do that in the description below as well. I use Robinhood. It is free to get started, and when you open an account, Robinhood gives you your first stock for free. So today, guys, in the first video, we talked about what a stock was and what you needed to do in order to buy and sell stocks. Today, I want to get more into the meat and potatoes of the situation, and I want to kind of give you some advice and share my thoughts on actually purchasing stocks and what to look for. So today I want to talk to you about investing in dividend stocks. So a dividend is just basically a distribution of profits by a corporation or a company to its shareholders. It's kind of like a payment, a reward that the company gives you 3 times a year or every quarter as a bonus, as an incentive for owning their stock. So when a company owns a profit or a surplus, it's eligible to pay a portion of this profit. It's eligible to pay a portion of these proceeds as a dividend to its shareholders. And guys, any amount of the profits that's not distributed to shareholders is usually taken by the company and it's reinvested into the business. One important thing you need to know when getting started in looking for stocks and looking to purchase stocks that pay dividends is that not all stocks will pay a dividend. So if you want to invest in dividend stocks, it's really important that you first research the company, any company that you're interested in, and make sure that they pay a dividend. And one of the easiest ways to do this is to simply pull up Google and type in the company name and ask if it pays a dividend. So does Apple pay a dividend? Does Microsoft pay a dividend? Does Coke pay a dividend? So remember, those dividends, a dividend stock, and just recap, a dividend stock usually makes a cash payment into your brokerage account every 3 months, once per quarter. And that bonus, that money that you get, is called a dividend. And guys, dividends are probably one of the best ways to build wealth, because you could take the cash that you earn from that dividend payment and buy more dividend stocks. And then those dividend stocks pay you more dividends. So you can see that it's a snowball effect, and we call that a compound effect. So over time, the longer you invest in dividend stocks and the more money you spend buying dividend stocks, all those dividends kind of compound together and give you a bigger return on your money. Investing like this over the long term, guys, can result in a tremendous amount of wealth. And in the book, A Beginner's Guide to the Stock Market, Matthew Kratter talks about a gentleman named Robert Reed. And Robert Reed spent the first half of his life as a gas station attendant and then spent the second part of his life as a janitor for J.C. Penney. He lived simple, he lived frugal, and he invested most of his extra income into dividend stocks. And by the time he passed away at the age of 92, he left his family behind an investing portfolio worth $8 million. So guys, I hope you see that you don't need a high salary to become wealthy. You simply just need to spend less than you earn, and then you need to take some of that money and invest in dividend stocks. Guys, a dividend will hit your account every 3 months, even if you don't have a job, even if you're making, $20,000 a year, $30,000 a year. Think of it as like purchasing little stakes of real estate in the stock market, except you never have to evict anyone and you never have to, fix broken appliances like toilets or refrigerators or ACs. And guys, here's an example for you. If you buy a dividend stock of a company ABC at $60 per share, and then that company pays you 45 cents every 3 months or every quarter, That 45 cents paid 4 times a year gives you $1.80. That's your total annual dividend. So you take that 180 and you divide it by the price you paid for the stock, which is $60, and you get the amount of 0.03 or 3%. As of this video recording, which is right now live, June 18th, 2020, the average percent that a savings account is paying you for keeping your money in the bank in a savings account is only 0.06% a year. So you can see the difference there. You can make 3% every quarter, or you can make 0.06% every year. So I hope this really shows you the potential that and an opportunity that exists when you invest in dividend stocks. It's easy to purchase dividend stocks, and it can add up quickly, rewarding you for investing your money. Although that it's recommended that you take your dividends and you reinvest them and purchase more shares of dividend stocks, you don't have to. There's a lot of people out there, retirees and the older generation, that actually cashes out their dividends every month, and it helps supplement, their retirement or their monthly income. So guys, what do you look for when you go to purchase dividend stocks? That's a great question, and I'm going to give you a couple tips. Remember, a successful company will raise its dividends every year. So the longer that you hold a stock like this, the higher your dividend is going to become. These types of companies, they have a specific name. They're called dividend aristocrats. And a dividend aristocrat is basically a company that has raised its dividends every year for the past 25 years consecutively. So every year you own that stock, your percentage, the amount of the dividend that you get paid goes up. And these companies have been doing it for the past 25 years. Companies like Coca-Cola, Colgate-Palmolive is another one, Johnson & Johnson, and McDonald's. Now, you could invest in each of these companies individually, or you could take the easy way out and you could own a piece of every dividend aristocrat company by buying shares of an ETF. It's a stock called Noble, N-O-B-L, N-O-B-L. That's my first stock tip purchase for you guys. Look it up in the ticker. Familiarize yourself with it. Noble is the stock ticker for the ProShares S&P 500 Dividend Aristocrat ETF. And basically an ETF is just an exchange traded fund. It's a mutual fund. It's pieces of different companies brought together, working together, but it trades just like a stock. And you can purchase it with any brokerage account like Robinhood. And guys, remember, if you're interested, if you need a brokerage account, like I said at the beginning of the video, you can always check out the link in the description. Open your free Robinhood account. They'll give you your first stock for free. And my tip for you is, if you have a particular company in mind, look it up in Google before you invest money into it. You want to head over to Google and you just type in, how much does blank pay in dividends? So how much does Apple pay in dividends? How much does Google pay in dividends? How much does Microsoft pay in dividends? For the most part, they will tell you on Google, and that'll help you make an educated investment, an educated decision, which is good. It's your money, so you want to be smart about it. You don't want to just invest in things blindly. You definitely want to do your homework. Some other great some other great dividend stocks that I personally have invested in, I'll tell you right now, is Wells Fargo. That's the stock ticker WFC. Also Coca-Cola. I do own shares of Coke. That's a stock ticker for that is KO. And I do own shares of Apple. The stock ticker for that is AAPL. And I own shares of Noble, the ETF that I just told you about, NOBL. So check those out. They all pay really nice dividends. They all pay really nice percentages percentages. It's a great way to park your money rather than a savings account. These are safe companies. I think Coke's been around for 128 years. Wells Fargo was like over 100. And we all know that Apple is not going to go out of business. So it's a great place. These are great stocks to park your money and earn higher than an interest rate that you would in a savings account. And you really don't need to look at your stocks every day. You just set it and forget it, invest, check in once every couple months. That way you don't start pulling your hair out. But it's usually a safe bet to invest in companies that pay dividends. So in closing, guys, remember this. In order to even be able to pay a dividend to investors, a company needs to be making money. It needs profits. It needs to be pretty healthy. Sometimes a company will borrow money to pay dividends. That's just the sad reality. Sometimes they get into financial trouble. Sometimes they will borrow money. That's a recipe for disaster. I'm going to tell you right now. So if you find out that a company you have invested in is doing that, is borrowing money to pay dividends, I recommend that you sell that stock immediately and you look for another one to invest your money in. It's your hard-earned money. You don't want to lose it. And guys, remember, dividends are almost always paid out of a company's free cash flow. That's another advantage of investing in dividend stocks. You know that the company is successful and making money. If it wasn't, it wouldn't be paying out dividends. And finally, guys, owning a basket of dividend stocks over a long period of time is a great way to build your portfolio, build confidence in your trading abilities, and it's one of the best ways to build long-term wealth. And who knows, if you start early enough, we might all just end up like Mr. Ronald Reed and have a portfolio worth over $8 million. Well, guys, that is it. That wraps up this video. Thank you for coming back for take 2. If you like this video, please give it a thumbs up. This video will be over on YouTube. You can subscribe to my channel there, Expert Influencer Academy. I hope everybody is doing great. Have a great weekend. I'll be making more videos about this topic moving forward. And that's it. Have a great weekend, and we'll see you in the next video.